Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video
Good day,
player.
everyone. Ira Epstein, and here we are on what I'll call the Risk On, Risk Off Day. And this is Tuesday, the 21st of June, 2011, time getting on about 2:15 in the afternoon Central Daylight Time. What do I mean by what I'm saying? Well, it appears that the psychology of the markets, I use the word plural there, seems to be they're either on a risk-on or risk-off situation. Today you're getting a sell-off in the bonds. Why? Well, traders are saying they don't need them. They think that it's risk-off. They're buying. Or risk-on is what I meant to say. They're buying the stock market. They don't need to run to a safe haven. At the same time, gold is up $4 and silver is up 40 cents. Now the question is the copper in the silver market up because they think that things are going to go well in Europe right now and that the world economies can stay on track? That's a big question because you can see the dollar index is down right now 50 points and the euro's up 105. What if the vote isn't a good vote of confidence for Greece? In fact, what if the vote fails tonight? If you're watching the crowds, a lot of people don't want to see this vote go through for these austerity measures. Okay, so now let's talk about that for a minute. In the gold market, and I'm going to write my gold report, actually I'm going to write it tomorrow, and I'm going to let tonight come out and put my thoughts down, but my basic thoughts surround this. That let's assume that the vote passes. If the vote passes, what you get, I think, is a euro currency that might rally a bit more, the dollar down. Well, my logic at least is that that's supportive of gold. Let's assume in my gold report that it's free, by the way, and you see the number going on there. In order to get it, you got to give us a call. And I haven't written it yet. It's going to come out Thursday. Let's assume that the vote fails, all right? Well, I would expect the euro to fall, the dollar to rally, and a rising dollar. Is that going to be bearish gold, or are people going to run to gold for safe haven because they don't know what's going to happen? That's the interesting part, and I think that either way that it goes longer term, both situations are very bullish for the gold market. So I have a bullish bent. The question is timing, and that's what I'm waiting to see. This is a chart of the gold-silver ratio. Now, let me explain this in simple terms for you. This is how many ounces of silver you need to buy an ounce of gold. It's that simple. When silver prices were rallying up to $50, you'll notice that the chart was falling because silver, at the higher the value went, it was outpacing gold at that point in time. Since the market made the lowest point just in the end of April, it bounced into the 40 area, and it's been hovering in between, say, 41 and 43 for the longest period of time. And these black lines you see are part of what I call a Bollinger Band, and the market seems to be winding itself up in there. The longer this goes sideways, the more potent a big move is going to be. Now, I don't know which way the move's going to be. I don't know if it's going to be gold over silver or silver over gold. I know that the market's trading over the red line, the 18-day average of closes, which, as long as it does that, I have a bullish bent. Here is a chart of your August gold. And let's take that chart and put on it first the swing line study. The swing line study looks at a market and measures previous highs and lows, immediate ones. Does it in a certain way each and every time. What is a trend? Well, an uptrend is made up of highs that are higher than previous highs and break lows that are higher than previous lows. I filter it by looking at the 18-day average of closing prices. So I give an A in terms of this part of the chart being bullish to the gold market. I also look to see where previous or other moving averages are. Previous is the wrong word, other ones. The 45-day is under the market, and it's not over it, so there's not resistance from it above the market. And the 100-day is way down here. So remember this chart because silver looks very different than this. So the next thing I'd look at on gold is where's the potential for resistance? And that comes in at 1553.20, the Bollinger top. You'll notice markets can hit a top, but they like to back away from the Bollinger top or bottom. Can't even show you a bottom on this chart. You haven't hit it in a very long period of time. So I think the bulls are in control of the market, but you're already getting into an overbought condition, and you haven't really gone very far in this market one way or the other. So that's a little bothersome, and that gives me reason to tell people, hey, if you're long the gold market, do you really need to have the whole position going into the vote? Something for you to think about. Here the market is, as you can see with the Bollinger Band, all the other studies that you need there, and here's the silver. I think I had the same chart up there twice. In the silver market, you've rallied up to the 18-day average of closes. Now let me just come back a few days. This was Friday. You need to take out 35.97 to create a pattern of a higher high. It does so when it comes up to 36.20, and this was on Monday. So now you've got a pattern of a higher high, a higher low, but you're under the red line, the 18-day average. Momentum of the chart is picking up a little bit, so what would I look for? I would look for the market to try to get up to the 18-day average, which is 36.57 at this point yesterday, and try to figure out what to do next. This is the next day, and this is today. The market's high today is 36.57.5. You know, these numbers don't always work out, but that happens to be where it's at. The 18-day average has slipped down, actually, to 36.51. So the market's trading literally right at that number at 36.47. No edge, very neutral market. But I want you to look at what's happening here with your Bollinger Band. It is narrowing in dramatically, and somebody's sitting there, and it's like a spring. Which way is this going to break out, upside or downside? You have no edge in knowing this the way, at least with these tools that I'm seeing on the chart at this point. The copper market, let's go back to yesterday. In fact, let's go back beyond that to Friday. Here is a market that at this point has a high that is higher than a previous high, a low that is higher than a previous low, and if you had bought at 411, let's call it 20, your risk factor would have been to this low, which is on Thursday at 404.60. I know it doesn't look like a lot, but that's thousands of dollars. It's a lot of money. It's 7 cents at $250 a cent, so you add it up. It's, what, $1,700. So the risk factor doesn't make sense. The market drops down yesterday and hits the Bollinger Band, which is one of the areas I tell you that that's the first support zone. The momentum of the market is turning down, which now you've got a pattern. This all happened in one day. Lower highs and a lower low, which tells me that on rallies, I would expect professional selling near 411.50 with stops over 415.60s. It's still a lot of risk. It's $1,000 and certainly not something that I would recommend in my charting course, but look where the market stopped. Okay, there's really momentum here, and this chart is saying things are a bit bearish right now. Let's go to the crude oil, and let's go to the WTI and the Brent crude, the two grades. Think of it American and the rest of the world. And suddenly what the market is doing is, you can see on this chart, while it had rolled over and stayed under the 18-day average of closes, you're finally getting a pattern where the market is rallying up and trying to get to a difference of $16. So when the market approached, say, $19, $20 difference between the two, that's too much, apparently, and the market's trying to come up and narrow in the difference. I don't know what that means for overall for the crude, but it's just something that I watch. What I do pay attention to is where's the market in relation to the Bollinger Band you hear me talk about. Well, yesterday, the market stayed under it, and the day before, and it got down to it the day before that, 3 days. So to get a bounce over it, okay, did this change the trend of the market? No. And look how you narrowed in right through here your Bollinger Bands. I view the trend of this market still down. The market is very oversold, but it's got a bearish influence right on through it as I'm reading it. Here is the Brent crude, and look where it fell to. Bollinger Band bottom, holding, oversold. Not the same pattern as you had on the WTI. This is just a normal market that's in a bearish pattern until it gets back over the most recent high of 113.38. And even when it does that, it'll be under, at this point at least, the 18-day average, so you can negate the downtrend possibly. But I don't see how it can start an uptrend here. And you're so oversold, I don't see a reason for traders to consider the short side. In the Rebob gasoline, you've got a high, a lower high, a lower low under the Bollinger Band. What's one of the things I would tell you? I don't like the idea of my students, how's that for a good word, being short under potential support zones. I don't care if the market goes lower or not. You're oversold. That doesn't mean the trend isn't down. It clearly is until you take out 295.12. That, and all you can do then is negate the downtrend. So what I'm going to do tomorrow is I'm going to take a look at the vote. I'm going to see Bernanke's speech in the afternoon, and I'm going to start writing my gold report. If you'd like a copy of it, you call us at 1-866-973-2077. I'm Ira Epstein.